Hey traders, Jason here from Leavitt Brothers. Happy Sunday. I'm going to do an update on my State of the Market series. It's been a few weeks since I've done one of these. I do it every week at Leavitt Brothers in report form, but I only do it about once a month in video form and post at YouTube. So let's get to it. So the Nasdaq is leading. That's where a lot of the big winning stocks have come from. So let's look at it first. What I see here is off the March low. We have a steady trend up. Okay. The orange line here is the 21 EMA. Obviously, the index is steadily trending up, higher highs, higher lows above that moving average. You have the MACD, which is pinned at a high level, which is indicative of the trend. You have the stochastic, which is oscillating up and down above 50. So everything points towards there being a solid trend in place. It's trending up, higher highs, higher lows above all key moving averages. Indicators are in great shape. Everything per the Nasdaq chart looks fantastic. So here is the S&P 500. It's not doing as well, but it's still doing pretty well. You have a trend up above the 50 moving average. You have MACD oscillating above 0, okay, and it just crossed up. It just crossed up right over here. Okay, so we had a move up, move down, and now it just recrossed up. We have the stochastic sitting at a high level, so everything looks good here. I would consider this to be just a consolidation pattern within an uptrend. Nothing wrong with that. Okay, when you get a trend up and then a consolidation pattern within the trend up, prices are pinned up here. If I could draw this, pinned up here near the highs. We had 3 quiet small range days to close last week. It's really poised to break out a run if it wanted to do that. And then the small caps are doing even worse, but they're not doing that bad. They're just not doing that bad. So you have a move up, you have a consolidation pattern here within the uptrend, above the 50 moving average. You have the MACD, which moved up, moved down, and right over here it just crossed back up. You have the stochastic, which broke out there, and is now up at a high level. So even the small caps, which are lagging the large caps and lagging the tech heavy NAS, the trend is still up. It's above 50-day moving average. MACD is just crossed. Stochastic is trending up and above 80. I mean, this is in good shape too. And if you actually look at the 3 quiet days here, this too is poised to break out and make a run early next week. All right, couple others. One of the things I look for, if you use the indexes, I mostly use the indexes as like a red light, green light type of system. I don't trade the indexes. I don't trade index ETFs. I just want to like answer the question, like, is the trend up? Is it not up? Is it strong? Is it kind of weakening? I'm just like, is the green light on? If the green light's on, then I want to be long. I don't want to look at it any more detailish than that. So here's the S&P 500 60-minute chart. And with its 50-day moving average. So 60-minute chart here, so 50-day moving average, and you can see that July 1st is right here. So it has spent virtually the entire month of July above its 50-day moving average, which is increasing other than just like 2 days over here. So this tells me the green light's on. Okay, so you could come up with whatever excuse you want, but the reality is, like, for the entire month, the S&P has been trading above its hourly 50. Which is trending up, and that means green light's on, and you should be going long stocks, trying to find the best stocks in the best groups, and you should be riding those. Going short, to me, doesn't make sense when this is the case. All right, another system I use is S&P 500 with the 5-day. This is the 5 EMA. This is the 10 EMA. So when the 5 EMA is trending down and below its 10 EMA, the trend is down. And when it's trending up and above its 10 EMA, the trend is up. Okay, so like if you were long the market every time that the 5 was above the 10, you would have been long here. you would have gotten out, but then you would have been long again, and you would have ridden this entire thing all the way up. You would have gotten out there, gotten back in, gotten back out, and gotten back in, and you'd be long virtually this entire month. Okay, so when it turns, there are some little whipsaw actions, but if you would have just used this one indicator as a red light, green light type of system, you would have been in the market for the majority. You're in the market for the majority of trending moves, and then there's a little, herky-jerky movement when a trend is underway. So right now, 5 is above the 10, green light's on, you should be long stocks. All right, let's get into some breadth indicators. All right, here's the NYSE. Here's the SP 500 versus the NYSE 10-day. This is the 10-day moving average of the AD line, and this is the 50-day moving average of the AD line. Okay, so when the market is doing well, okay, as it was over here, November, December, January, you get oscillations above 0, and that's mostly what we've gotten here. Okay, you got a dip below. Now, and it's not that this is a huge concern, but the trend has been up. Whoops, let me get a different line here. The trend has been up here, okay, which is good for the last month, but the absolute print over here is like not that high. I wish I'd like to see a stronger print. I'd like to see a higher print here. And there's no reason for this to dip so far below and stay there for a couple weeks when this is actually relatively minor. Okay, so I would consider this to be somewhat supportive of the trend, but not fully supportive of the trend. And then with the 50-day, yes, it's moving down, but it's perched up at a high level, so I think it's pretty good shape. Okay, so in good shape, I would say this is in good shape, but not in fantastic shape. I'd like to see oscillations above 0 like this, not this low print here and these prints down here. All right. This is the NYSE cumulative, the cumulative AD line, and what I'm looking for is I'm just looking for a trend. Can it trend up above its 50-day moving average? That's all I'm looking for. If you look at the bottom line here, or the bottom pane here, you got a trend up above the 50. Okay, so even when you got like a dip here, those dips brought it down to its 50, down towards its 50. So this enables you to say the trend is up, and minor dips will just simply move down to the trend line, down to the moving average, and then bounce off. So those are just dips within an uptrend. Okay, so it reclaimed its 50 over here. It sat above its 50 for a couple weeks as it rebuilt its strength, and now it's trending up. So it's actually doing well. Okay, we got a trend up. We got a consolidation pattern within a trend. We have this much of a buffer to work with. So even if we did get a little bit of a selling pressure down to like 3,000 here, you have a little bit of a buffer here, and it could still get caught. So that would be considered a dip within an uptrend if it happened. Okay, but right now when you get, S&P's in consolidation mode, and this is in consolidation mode, and this close here is near the highs, I don't see any warnings here. Okay, if there was a warning, then you'd have something like where this thing is moving up, and then this thing was kind of drifting down, and it wasn't supportive. So, but we're not seeing that right now. So right now this is in good shape. Okay, S&P 500 stocks above their 50-day moving averages, or their 20-day moving averages, 50-day moving averages, and 200-day moving averages. Okay, so when the market trends, you get prints above 0, prints above 50%, prints above 50%, with occasional, a dip within an uptrend is defined by this, a dip within an uptrend is defined by this. But on the 200 chart, the dip within an uptrend just simply takes it down to 0, and then it recovers. It takes it down to 0, and then it recovers. Okay, so this defines, this one here and this one here defines shorter term, and then when you get a dip over here, as long as it stays above 50% here, that's classified as a dip within an uptrend. So what do we have right now? Kind of a messy situation with the 20, because we got to move below and then above and below and above and above, below and above. So right now the absolute print is very good. It's like 80-81%. Same thing with the stocks above the 50-day moving average. It has been mostly above 50% for like 2 months, and the absolute print is very good. The percentage above the 200 has been lagging. Okay, so we had a little bit of we had a dip here, and a failure to recover. Okay, you can see what happens when the market is healthy. It trends up, it stays above 50%. Here we've had a pretty good Here we've had a pretty good trend up, and yet the number is like, not only are we getting a kind of a lowish print, but just the activity. You know, when the market is doing well, you expect some oscillations within, you know, above 50%. You don't expect oscillations down here in the 40 to 50% range. Okay, so overall, not bad. This is improving, but we're going to see more. We're going to want to see more improvement here. If this continues up here, we're going to want to see these hold over here, and we're going to want to see more improvement over here. All right, this is the Nasdaq versus the Nasdaq 100 stocks above their 50 and 200-day moving averages. The Nasdaq 100 is home to many of the high-quality stocks in the market. So first, want to point out, you know, got a higher high there, lower high, lower highs, and then of course you had this drop. So you have higher highs, lower highs, drop. Higher highs, lower highs, drop. Higher highs, lower highs, drop. Okay, and that's forming right now. So we got higher highs here, we have lower highs here. So the print here is really good. It's in the high 80% range. Print here is pretty good too, high 70% range. But we're starting to get a divergence here. Okay, so it's something to keep an eye on. Okay, some divergences only last a month before it induces a sell-off. Some of them last, you know, 3 or 4 months. So it's something to keep an eye on. Is that if this Nasdaq keeps pushing higher, and we have less and less stocks trading above their 50-day moving average, it's going to eventually induce a pretty good pullback. Something to keep an eye on. All right, here is NYSE new highs. So new highs, and this is Nasdaq new highs. So what I see here is, first of all, Nasdaq has been in good shape. Okay, it's been trending up literally since early April. Okay, and we got some really good prints, oscillations above, you know, the low of the range. Everything looks good here. We got a lower high in place there, and then we got 1, 2, 3, 4 lower prints below the moving average to end the week. So a little bit of weakness is seeping in, less stocks making new highs. At the NYSE, number of new highs has been slowly trending up. Okay, to fully support an uptrend, you're going to want higher prints here, you know, kind of like what you see here, but the trend is at least up. All right, so asking the stock market to make 52-week highs is kind of a, you know, it's a lot to ask, because the February highs were, you know, high, and the market fell so much off the low. So what if we only said, what if we only wanted it to make 3-month highs? Okay, so if the market is here, 3 months ago is only about right there. Okay, it's not a high bar to cross, to hurdle, if we only want 3-month highs instead of 52-week highs. So what we have here is that we have a lack of new highs is what's going on here. When the market's doing well, you tend to get, you know, prints between 200 and 600. But right now we're getting prints between like 100 and 400. Okay, so even though, you know, market's trending up, number of stocks making 3-month highs is lower than what it typically would be. And you can see that the 5-day moving average down here is a heck of a lot lower and less impressive than the 5-day moving average right there. Okay, so it tells us like less stocks are participating, the market's moving up, it's being carried higher by a small number of quality stocks, but beneath the surface, less stocks are participating. All right, 2 more charts. Here's the Nasdaq summation index. So what we have here, just to quickly point out, higher highs, lower highs, and then we got pullback. Higher highs, lower highs, pullback. Higher highs, lower highs, pullback. So what I'm looking for here is, now when it rolls over like this, it tends not to be too meaningful. If you move your eyes across the chart, there's, you know, maybe you get a little bit of a dip. It's not that big of a deal. Certainly if you're a trend trader, you're not going to freak out and panic just because it rolls over. But when you get a divergence, and divergences tend to play out over a, you know, 1, 2, 3, 4 month period, you do tend to get a pretty good pullback. We don't have one that's forming. What one could form if the S&P, continues up over here, and the Nasdaq summation index curls up here but fails to make a new high, we could get a divergence here, in a couple weeks. Okay, so that's something I'm looking out for. It's nothing urgent right now, but it just says that that's possibly on the horizon. Okay, last chart. This is the S&P 500 versus the 10-day MA of the put call. Okay, notice the topping formation here. So you got higher highs over here with the S&P, but then you have a lower high with the put call, and then you get a decent top and a 1 month pullback. You get higher highs here, and as that's taking place, you get the same type of higher low double bottom. Higher highs here, same type of double bottom with a higher low there. It's possible that it's going to form right now. Okay, if the S&P breaks out here and does this, and if the put call puts in a bottom here, we're going to have the same type of higher high and then double bottom, higher low formation there. Again, it's not urgent, it's not imminent. It might not play out. It might continue to fall here and just reset the chart. But it's something to keep an eye on. Looking out a week, looking out at two weeks. If indeed the S&P breaks out of this little range here and pushes higher, for a lot of these indicators, if they don't support the move, we're going to get divergences such as this one here. Okay, so overall, if we use the indexes as like a red light, green light system, the light is green. All the indexes are trending up or consolidating above their 50-day moving averages, and their indicators are in pretty good shape. The S&P hourly is above its 50, and the 5 EMA is above its 10 EMA and trending up. So the green light is on. The indicators are doing well overall too. Okay, the AD line at the NYSE is near its high. The percentage of S&P and Nasdaq 100 stocks above key moving averages are at high levels. New highs at the NYSE and Nasdaq have been trending up. Perhaps a local top is being suggested by like the Nasdaq summation index and the put call when you're looking at a few weeks. But right now the market is in pretty good shape. If you ride trends and aim to maximize opportunities, you have to be long with stops in place. While keeping in mind that earnings season is here and things could change, especially as we get closer to the election. All right, thanks for listening. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. All first-time subscriptions come with a 2-week free trial, so there's no risk checking us out. All right, see you next time.